Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we share with you all the latest updates about the stock markets, how the market's really trading at halftime in trade today, and also to help you understand which are the sectors and the stocks that are moving in trade and how do the markets really look like for the entire year 2023. We are continuing with our New Year special series, and joining us also will be a very special guest on this edition too. But first up, a quick check of how the markets are doing at this point in time. Down 353 points, the second day in a running when we are seeing some subdued trade on the street. 17,963 on the Nifty, so that 18,000 mark has been breached on the downside. 80 points gone right there. About 0.4% of a decline is what you can really spot on the major indices, the benchmarks as well. When you talk about the mid cap and the small cap indices, there's a mixed trend. The mid caps are in the green, but the small caps are seeing some kind of losses right here. 15.4, 15.5 for the India VIX right now. Still, that index needs to be kept on the watch list. In terms of the sectors, there's a divided trade that you're looking at, with the Nifty Bank dragging at the moment 0.7% odd, and the index that's really declining the most for the Nifty Bank is the financial services. That's where the losses are really brewing. 1.1% down for that one. Apart from this, the private banks are also seeing some cuts of 0.8% odd. Realty seeing slight profit booking after yesterday's sharp up move. We did see, financial services, and apart from that, the IT space is also dragging a bit in today's trade. What's doing well in an otherwise subdued trade? The autos are doing better. In fact, in the faster lane, 0.8% of an up move. Pharma, PSU banks, metals, they are also showing some kind of a move on the upside. In terms of the advanced decline ratio, you do have 28 stocks on the Nifty in the green, whereas 21 declines right there. Not too much of a difference, but still, it's tilted towards the bulls at this point. The stocks that are doing well at this point on the Nifty, top gainers include Bajaj Auto, Hero MotoCorp, so some of those two-wheeler names, Britannia, BPCL, NTPC, also some power and energy names, the oil and gas names that are actually showing some kind of move on the upside. It's Bajaj Finance that's dragging the most, 7.4% down. Bajaj Finserv down by 5.2% odd. ICICI Bank, Power Grid, Apollo Hospitals, the other stocks that are dragging the most at this point. But let's welcome our guest for the day. We have with us Gurmeet, Chadha, Managing Partner and CIO, Complete Circle Consultants, joining in. Gurmeet, welcome to Business Today TV in this new year. Wish you a very, very happy new year to your entire team, to your family, and we hope that this year turns out to be a great one for all of you. I mean, profitable, healthy in all sorts of ways as well. First question to you on the markets, what's the gut feeling right as we have begun this year, but albeit 2 days of gains and 2 days consecutively in the losses, still no deciding trend right here, but overall for the markets, how did the year look?
Thank you, Sakshi, and Happy New Year to you and the viewers. I think we've had probably 6-7 years of positive returns on Nifty, and
Yes.
it's India has done pretty well despite a very volatile 2022. I've not seen in my career, Nasdaq down 23%,
Yes.
S&P down 20%, and India, managing to stay marginally positive. I think 2023 is going to be a year where probably you will see more asset classes now becoming attractive. So, 2 years back when interest rates were low, we used to call it TINA factor. There was no alternative to,
Correct.
equities. I think those alternatives have come up both in asset classes and geographies. So if you see, for example, in US, the 2-year bond is giving 4.5% in dollar terms. Similarly, even in India now, the fixed income yields are 7.5 to 8%, which are fairly attractive versus what they were, right? So I think a balanced portfolio, considering all asset classes and maybe some geographies, is a good start to have. That doesn't mean India does not have opportunities in equity. There are opportunities and pockets of opportunities which will keep coming. Government is pushing a lot of schemes through PLI. We had a hydrogen policy yesterday. We've had PLI schemes in 13 sectors. Banking is looking good. So there are pockets of opportunity. Only thing is probably you need to guard yourself more in terms of being more diversified and having your risk metrics in place.
Okay, so let me take that point a little forward. Say, for example, a small retail investor today has 10 lakh rupees to invest in 2023. How would you advise them to put this money or deploy these funds in 2023?
So, if you are relatively young and you have time on your horizon, I think a good start could be 60-40 or 70-30 towards equity, with equity allocation being more staggered. My sense is the next couple of months, the interest rates in the world will peak. So will inflation. Already we have seen a sharp fall in crude gas prices in
Yeah.
Europe, and commodities. So I think inflation will start coming off. And the one thing which you see, interest rates are like gravitational pull, right? In the market, they keep pulling down the valuations. So as interest rates go up, you will find high valued stocks getting impacted. Well, look at Bajaj Finance today. It wasn't a bad quarterly update, but because it is so richly valued, the reaction is pretty extreme. So next
Yeah.
2 3 months, spread that money. Maybe 3 months you can do a staggered approach, combination of stocks, MF,
Hmm.
and 40 to 40 bucks should go into fixed income. I would prefer a 3 year maturity in fixed income because the yields are 7.5% plus,
Hmm.
and you will get indexation benefit if you hold for more than 3 years, which improves the post tax yield of the portfolio. So a balanced portfolio, maybe 60 third one third is could be a good starting point for 2023.
Right. But overall, a lot of top global brokerage houses have actually pegged 2023 as a year of, say, no return. What would be your, would you have consensus with that? And, your sense, will it be a year of flat returns or good returns? And how much?
See, I don't know. I think the short answer is that I don't know, but only thing is as I say that our economy is on a growth track of about, let's say, six
Yeah.
percent, nominal growth of 12%. So we are doing much better. Everything is relative in the world. So the world faces recession. You are talking of 12% nominal growth, which in my view is pretty good in an
Hmm.
environment we are in.
Hmm.
So I would say the odds of positive return are higher. I don't know how much they could be. And as I
Yeah.
said, if your stock picking is right, if your asset allocation is right, I think there is still money to be made in the market. I
Hmm.
don't necessarily buy that argument of predicting. I think our job is asset allocation, not astrology,
Sure.
as far
Sure.
as I see.
So, top three themes, Gurmeet, if you could share, which you believe will be, outperforming in the year 2023, come what may. We do not know whether the recession will hit, how hard will it hit, and for how long will it hit for. Will there be other concerns that will emerge? Obviously, nobody knows the future. But come what may, some of these sectors or themes that you believe this is the time that one should be focusing on.
So, I think financials, I think will continue to do well, especially banks. I think we should not get carried away seeing the rally in some of the mid-sized PSU banks. I think people tend to forget other metrics and only focus on growth. The easiest thing is to increase credit offtake. The difficult part is to ensure NPAs don't go up. And that's why banks like HDFC Bank, while they haven't done well in the last 2 3 years, but it's a gold standard bank. Last 20 years, the NPA hasn't gone up below 2%. And we've seen all cycles in the last 20 years. So I think
Hmm.
stick to large private banks in PSUs. Maybe SBI or Bank of Baroda. Amongst NBFCs,
Sure.
I think now there's a sizable correction. So a nice basket of financials will do well. Something like a CDSL, which is also a play on structural savings in India with 11 crore demat accounts, right?
Yeah.
And now even insurance depository coming up. So play financials as a bucket. I think this will continue to do well, much beyond 23 as well. I think next few years look very good.
Hmm.
I like manufacturing, few pockets in manufacturing, especially defense, electronics, textiles now with India trying to do not only just PLI but FTA with Australia and UK FTA likely. Uh, and some pockets of chemicals where I think India is likely to be a big beneficiary of both China plus one and now Europe
Hmm.
plus one. So manufacturing is the second team which I think will fairly do well. I think manufacturing share to GDP will go up, and you will also see a lot of people say, and if you speak to foreign brokerages who manage large money, you will see that this is the year where you see substantial manufacturing base getting shifted to
Sure.
India.
Hmm.
Fingers crossed. I hope that happens. And
Hmm.
the third theme, in my view, is being a little contrarian in the market, where
Yeah.
where good businesses go through temporary lull periods. So I would go with technology. I know
Okay.
it's under weather, and if you have a slightly more longer view, and if you can probably go little staggered, I think tech offers a lot of value now with the correction which is happening.
Okay, so the large caps or the mid caps is what you would prefer?
Bottoms up, as I said. So within large cap, for example, in tech, I think Infosys has been a great capital allocator. I mean, it returns last year they returned 80% of the free cash flows they made through dividend and buybacks. Last quarter, if you see the update, the cloud revenues were $1 billion, right?
Yeah.
Led by their cobalt and cloud facilities, deal will continues to be good. Yes, there will be some softness in demand, and there are pressures, and that's the reason the stocks is down more than 20%. So and something in ERD like KPIT or Tata LXE, where we are getting more long-term contracts related to, let's say, case, which is connected autonomous shared electric, the case segment per se.
Right, right. Now, what should one do in this entire new age tech space? I do know that we have discussed this before also, but there is just no confidence that's building. No matter how much time passes by, no matter what all measures do the managements really take. Now, Paytm, for example, has slipped into a mid-cap stock now. We do know that Zomato is continuously reeling under the top exits at this point in time. What should be, and again, the valuation concerns are emerging on the upcoming Mama Earth IPO as well. So, and that's before we get to know the issue price, before we get to know what exactly the valuation is. So, what's really happening here, and how should one approach this entire space?
Large pocket of this is an avoid, Sakshi. Still, price correction doesn't make it a value buy. A lot of people think simply because the stock is down 50-60%, it's a value buy. So I think you have to go purely beyond that. I'm not saying I want to look up all new age companies into one. I think, as I said earlier in the show, interest rates and valuations are inversely linked. So when interest rates go up, you have alternatives. Today, the cost of not doing anything is 7.5%, right? By parking yourself in a debt fund, even a liquid fund is yielding 7%, right? So anything where you do not have a glide path to profitability, anything where your projections. So I was seeing Swiggy's number, though not listed, that losses again doubled along with top line. At some point of time, you have to have a glide path to profitability. One segment which I like, in this space is logistics, and I personally think that this is one space which will do very, very well. While delivery did do two good quarters, but
Yeah.
against the last two quarters, this is one space I will track. But I'm not buying anything yet. Anything which is not making money right now is a clear avoid for me. So once it starts making money, I'm happy to buy it a little expensive.
So,
As
what
simple
would
as
you
that.
advise all those investors who are feeling absolutely stuck here in the last 1 year? I mean, like they invested, they got the allotment at sky high valuations. What do they do?
See, if it's a small part of the portfolio, 5-10%. I mean, you maybe just hang around with it because you don't know. Maybe one of them can take off and make up for it. But if it's a substantial part of the portfolio, let's say if your portfolio has only 25% new age companies, just take that hard call. Trim that exposure by maybe 50-60%. There are better opportunities. Trust me. We think sometimes the loss aversion bias is more. It leaves a scar sometimes, and it's difficult to exit your loss making calls. But
Sure.
good investors, what they do is they book losses, they don't book profits.
Absolutely. Well, thank you so much, Gurmeet, for being with us on this show. It's been an absolute pleasure speaking with you in this New Year special, and hope to catch you very, very soon again to discuss more about the markets. There's so much and to discuss as well. We cannot fit in everything in one show. But here's wishing you once again a very, very happy New Year, and I hope it turns out a great one for all the viewers and investors as well. Many thanks for joining us. So
Thank
let's
you.
quickly look at how the markets are doing at this point. Again, 430 points gone there for the Sensex. 60,220 is the current level. 17,937. 100 points now down for the Nifty as well. About 0.5, 0.6% down for the Nifty, 0.7% down for the Sensex. So there's a deeper cut that you're looking at the Sensex as well. Nifty Bank clearly downward move, and some of the heavy weights are contributing to this decline. 0.9% of a cut for the Nifty Bank right here. Bajaj Finance, Bajaj Finserv, very, very sharp fall right there. So some of these major stocks are actually pulling down the index and creating some pressure right there. Will the markets bounce back from these levels? Will there be a pullback or not? We'll keep an eye out on that. And to understand all of those nuances about the markets, you should stay on with us onto Business Today TV to catch all the updates from the world of business and stock markets. Many thanks for joining us on this edition.
Domestic equities continue to trade in a range-bound fashion. What are some of the key